Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on euro currency. So last week was not very active. Market has spent the large part of the time inside the consolidation, and as a result we've got three side-by-side dojis on the daily chart. So this is kind of the flag pattern is forming. On the weekly chart it was more interesting because last week has become the bullish grabber. And this bullish grabber suggests the action above these two tops, so at least above the 115 area. Interesting is that on the dollar index we have the same grabber. And the weekly chart provides more or less clear setup for trading. So if you have the bullish view, you could use the grabber setup for taking the position. So invalidation point of the grabber stands right here, because this is the lowest of the last week, and that is an invalidation point of the grabber. And it means that those of you who have the bullish view and then take long position could do this inside the flag with the stop somewhere below the lows, and the target at least around OP, that's 1450 approximately. It's AB equals CD pod. Following the grabber logic, it should be above this area. For the bears, it's a bit more difficult situation. Overall context looks really tricky. As I explained on Friday, as bulls as the bears could find the reasons, the explanation why they should go in one or other direction. So the bears could say, well, market can't proceed high on the 1360 area. It's a fib level. It shows it's challenged this area already 3 times, and it can't move higher. It's very choppy action. It means that probably this is just retracement on the hitting of the major OP, and we should be ready for a downward breakout. Well, this is reasonable explanation. On the opposite side, the bulls could say, well, market doesn't show the deep retracement. It stands very tight to resistance. It's calling around the resistance. It's forming bullish flag. We have the bullish grabber on the weekly chart, and it means that market should go higher. At least we should get a kind of the ABC reaction here to the upside. That's also reasonable. So, but reality, guys, as usual, tells that although technical picture stands really more in favor of the bulls rather than bears, we will get the Jerome Powell speech on Wednesday. We will get the ADP report, and we will get non-farm payrolls report. Recent analysis of the United States economy sentiment stands positive, and the chances that we will get the some positive data, despite the shutdown in the government, looks as very high, and the situation could change in opposite direction just in a blink of an eye. So, in such circumstances, what we could do? So, for bulls, I would suggest the following tactics. So, if you have the long bullish view on the market, you could use this picture. First of all, take a look that in reality you could use closer invalidation points. So if this stops below the weekly grabber stands too extended for you, you could use this level. This is pretty nice support. It's confidence support area. Besides, market here has completed harmonic swing, and if market indeed bullish, it should not break the daily flag in opposite direction. We should not get the downside breakout here, and market should go up. That's why you could try to take the position as closer to these lows as possible, with the stops somewhere below 113, below the confluence. Or it will be just perfect if you will be able to place stops somewhere below the weekly grabber lows. In this case, you could try. You will be able to use the weekly pattern in your favor. That's what about the bulls. Speaking about the bears, if you have the bearish view, guys, it's not the time for taking position yet, because take a look what really has happened on Friday. That was our Friday setup, if you remember. We said, well, that was Gartley's cheap to sell. Now market probably will form another guardrail triple to sell, and you could use it for a take in the short position. And that setup has been completed. So you can see market perfectly has started downward direction right to the 618 resistance and completed our ABC top OP target, pips to pips. So that was just perfect action. But at the same time, there's no downward action has followed. The market returns that big up inside of the consolidation. So you can see that all bearish scenarios that we've got lives for very short time and just complete the minimal targets. And if you have the bearish view, you probably will have to wait for another bearish pattern that will be formed here. Once you will get it, you could try to repeat the Friday scenario. So again, try and take the position on some bearish pattern and move your stops to the break-even as soon as the pattern starts to work. That will protect your position. Because currently, guys, long-term situation on euro currency stands not in favor of the euro. So I have explained today in our weekly report the background. Because currently, by our opinion, is that market is driving not by some fundamental, some economical factors, not by seasonal factors as some traders think, but they are driven by the politics. And with the unrest in Europe, in the common Brexit, in the difficult situation, in uncertainty in politics in the world, you probably know what's going on in the Middle East and Venezuela, some difficulty political fighting stands in the United States as well. So you can see how the fifth column in the United States raised ahead, and currently the whole world see how a lot of animals of the American people sits in the government. So they just can't let Trump to work. So it's just amazing. And in the current situation, hardly euro could get some advantage because United States controls a very big part of the European economy. And they definitely do not let Europe to follow its own business interests, to get the profit, to get the wealth, when the United States bear the whole brunt of the Chinese trade war, the sanctions against the different countries. So it's not they do this not to prosperity of the Europe, and we should understand that. So that's just in 2 words. If you would like to know a bit more, you could read the weekly report. So what I would like really to say is that yes, the technical picture stands a bit in favor of the bulls, but by the end of the week, situation could change drastically. And if you have the bearish view, just keep an eye on the possible bearish patterns that could be formed through the week, either inside of the consolidation or maybe when the breakout already will happen. Because, guys, actually, the 112 lows is the last outpost for the bulls and the last major FIB support on the high time frames, on the weekly and the monthly. Once market will break the 112, I expect the acceleration down. It will be a very fast, probably breakout. And actually, the road right to the 103 area, to the previous lows, will be open because no big support stands between the 112 and 103. So this is very important. Well, next week is promised to be interesting. Let's see what really we will get.